What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head into the rest of the week. Before we get started, again, don't forget to check out the link in the description below. Got the link to the Rawstocks Discord as well as the WAP upgrade site where you can get the premium membership. Right now, still only $25 for premium membership, where you get the custom callouts, you get the book study for premium members, going over the ICT 2022 mentorship content, and you also get the private premium member chat room. As well as some other ways you can support the channel. Also a link to Top Step if you're ever looking at becoming a funded futures trader. A lot of you guys know I recently passed a funded trading account combine. I'm now a certified funded futures trader. So if you guys are ever interested in checking that out, there's a link in the description below as well. Let's jump into the charts. So yesterday we talked about a couple different things that could have potentially played out, right? We talked about the move just straight up into the weekly fair value gap that we have listed here on the chart. And from there, we'd be looking for some kind of reaction, right? Then potentially a move back even higher. Another scenario that we played out was that we might just come up to the top of fair value gap and then see a rejection. And then the third move we were looking for was a potential correction down to potentially either a optimal trade entry fib level or even inverted head and shoulders equal with the low back from January 25th. So we did see a little bit of a push up to kind of clear out the liquidity that was in the high of Friday's wick. And then from that point on, we sold down, right? We cleared out this candle. We closed below 189.46, which was the low of Friday. Or 189.48, I'm sorry. So close below that. So a little bit of a bearish look. And so what could we anticipate? Well, with CPI around the corner tomorrow, it's hard to say whether or not this was just a move of manipulation prior to CPI, but we will look at a couple different scenarios on the daily time frame and say this could likely happen, right? So one of the scenarios, again, that we're looking for is that CPI gets taken poorly by the market, we get a general sell-off, and we come back down and we test this low from, again, January 25th, right? And that would be setting up a potential head and shoulders where we could see a bounce. I still really want to see us draw into this weekly fair value gap. You can see this candle here hits it, but if you look on the weekly chart, this is actually the week where it sets the parameters for this fair value gap. So let's go look at the week real quick. You can see in this week's candle is the wick that sets the bottom of this fair value gap. So that daily candle doesn't count as far as drawing into it. We have not seen price draw into it yet. We also had a really nice bullish candle last week right after we ran the stops out here. So what are we doing right now? We're just running a test of this breakup candle, right? And ultimately we're running a test of this giant breakdown candle on the weekly chart. And I don't think we're going to go, extremely high. We do have another fair value gap above here that goes all the way up to 235, 223 and a half to 235. If we were to break out of this one, right, we would attack the next one. But maybe we only get into this fair value gap and then we see a rejection and then continue to head lower, right? The weekly RSI still doesn't have a bullish look to it yet. So that's why I'm anticipating just a draw into this fair value gap and then a continuation down. This wick right here that stole these stops right here, I do anticipate that low is going to hold. So we can see price come back down all the way to 180, right? And then see a rejection up. Let's go back to the daily chart so we can take a better look at it. If we caught that move, that could happen tomorrow with CPI and then start to rally up through the rest of the week. Again, looking for us to draw on that 196 to 200. You can see we attempted here where we pushed up above Friday's high, but we only got into the daily order block right here, right? And then we found rejection, and we can look at that on a different time frame. But we rejected that. It's called a fail to deliver. So what are we going to do? We're going to potentially cycle back down to sell side targets so we can draw a little bit more liquidity, right, in order to make the potential next move up. So we have our daily liquidity targets that are found in the wicks here, and we can see what else is on the other time frames. But right now, we're just drawing down into liquidity before I anticipate the next move into this fair value gap. How far we go down before we, dry up that liquidity is these internal liquidity targets, and then we have the low from over here that would hold as a inverted head and shoulders. Beyond that, we're drawing down here, and if we draw down here, we're likely to head lower all the way down to 265, right, which would expand our discount zone lower, 165, which would expand our discount lower, and there we'd see if we caught some kind of reaction on that liquidity level there. Let's drop into the 4-hour chart. On the 4-hour chart, we talked about an inverted fair value gap, and that was found right here. And we drew it across, and we saw back on last Wednesday, we dipped down into it. That was some indication that we were going to see some bullish momentum. We did see that, but then into today's trading session, right, we just saw basically 4-hour candles straight selling off. We're still just barely below the 50. Nothing says this can't crawl back up and make a run at the top, which again would put us into this like 200 price range. Still anticipating that to happen. I kind of think this is speculation, but I'm kind of thinking what happens is that we get this early sell-off today. That was the manipulation move. We head into CPI. We see this rally up, right, exactly to my target. It'll trap some more bulls, and then I think we do see a rejection from there. Whether it's a deep rejection or, a small rejection, I do anticipate we'll see activity inside of this weekly fair value gap. Now, we are still pretty close to this inverted fair value gap all the way down at 185. So, again, nothing says we can't pop down there, see if this, again, holds the support. If this level gives out at 182.61, it's pretty bad news going all the way down to 180, I would anticipate. So just be watching for those levels to see if they break. Again, 182.61 is kind of the cut point if you're still holding on to any kind of longer term positions, because at that point there's not much left that's going to stop us from going much lower. If you do look at the low to high swing, right, our optimal trade entry is going to be at the 182.74 all the way to 180.97. That could still find us as support if this is a market maker reversal. But what I don't like about the potential for that to happen is that we didn't take a new high here, right? So I would like to see us push up, take a new high, and then if we reject, right, come back down, not to the same, it won't be the same levels. If we set a higher high, right, our optimal trade entry will then be around 185 to 183. But that's what I would like to see. I'd like to see us take this high, pop back down. That happens all the time with Tesla, where we see it run off an optimal trade entry and then pop back up, and then come back to an optimal trade entry and then see it run from there. So we'll just be watching those different levels. Again, if we pop up, then our optimal trade entry ends up perfectly where that inverted fair value gap was, where it could offer support. So if we drop down into the 1-hour chart, on the 1-hour chart, we just see a little bit more detail about what happened today, right? We have our current dealing range of high to low. Right now, we have just been selling off. And at that point, right, where are we going to find support? Again, we have that 185.65 as our next level down. But this whole thing right here is actually an order block as well. And so we will see if this order block holds or not. It's a pretty big order block. On a 1-hour chart, we're right at consequent encroachment right now. That definitely could hold us for a rally. Again, we could see us push down all the way to 185.65. But if we go past that, right, we're into this fair value gap, and then we're deeper down there. We also do have a bigger 1-hour fair value gap right here from last Tuesday, if you mark that off on your 1-hour chart. So we have lots of different liquidity that we could be drawing into. I really don't want to see us draw all the way down here, but if we do, we do. From there, we could see a bigger rally. Again, if this ends up being the top and we do draw down because of CPI potentially, right, take out this inverted fair value gap, will be no good anymore. Come back down. There's our optimal trade entry zone, 181 to 182.76. And at that point, could be looking to go long, again, back up towards that $200 range. Let's take some of these off, drop down into the 15-minute chart, give you a little bit better look at what happened today. So we're here on the 12th. we're looking for the 9:30 candle open, so 15-minute, right? This is our London range right here. We ran out London low. We had a nice 15-minute pop up. Failed to deliver on the high of the pre-market or London range. At that point, we get a sell-off. On a 15-minute chart, there's not necessarily any indication. Besides, it was just a fail to deliver. There's no indication of a short on that chart. As you see, there's no fair value gaps anywhere in here, not until we get all the way down here, where you could have potentially grabbed that. But if we look at the shorter time frame charts, let's just drop down to the 1 minute. There was a couple call outs in the Discord today. They didn't exactly go the way we wanted them to. Let's actually pop over to this one right here that has our London range on it. And let's throw on all right, here we go. So let's grab Tesla. Check it out on the 1 minute chart. It's got our time macros on it. Again, you can see pre-market, right? We fade it, we take the low, we pop back up, we fail to deliver on the high. I'm going to show you guys a couple different entries. I tried to call one out, didn't get it in time. Trade for me went over $300, and it was only a few minutes for that trade to play out. But basically, what I saw here is I saw a double inverted fair value gap. Right, so we had 1, 2, 3 as we drew back up here and down, entered the trade, ran it up, ended up being about a $300 trade on multiple contracts. Okay, we come back down into it, we get a second entry, and then run it back up on the old high. Also got a call out on the Discord that ended up going for $100, and that one was this fair value gap here. I did not take the close. I'm still in the position, if any of you guys are wondering. Should have probably taken the close as we came back down to break even. Trade went up $100, and then what ended up happening is, you see, we take the high, right? We run the stops, come back down, and then you start to see indication that we're making a bearish move. Right? So if you're using your smart money concepts, we catch that fair value gap right after we topped out here. The tricky thing is that RSI was not overbought, so it was a total fake out, right? We expected price to make a run on this liquidity target here in the green, or even all the way up to that fair value gap, and it failed to deliver. Didn't give us any indication besides maybe an RSI double top as far as the RSI goes. There was some divergence here. But that was real far away from being overbought. So this is just a straight manipulation move, right? Looks like it's going higher. Caught us all off guard, right? Gives us that fair value gap, but we got some fair value gaps here. So it's not necessarily just because you get a fair value gap and some displacement doesn't mean it's always going to go much lower, right? We were bullish last week. We had a bullish bias going into this week. Potentially continuation, and we just got slapped down. So we get this fair value gap, right? Price tries to go back up to it, doesn't even deliver all the way back up to it. Pretty close, but doesn't even quite get into it. And then you continue to get some displacement to the downside, right? And those fair value gaps continue to hold. If you're tracking these, right, they continue to hold. Each one of the displacement we're getting continues to hold. And even the bullish fair value gaps end up being inverted fair value gaps right here. Right, we get a fair value gap inversion. One candle comes back down through it, and then that fair value gap inversion ends up holding again as resistance, and we see price come back down. So all of this is just showing you, some ways to look for that reversal. I continue to average into my position down here. So I still am in the 200s and the 195s. We'll be seeing if that manipulation today, and this just big drop and kind of continuation to the downside. You can see during after hours, we just kind of fizzled, didn't do a whole lot. But we didn't also see much of a continuation. So we saw that reversal kind of at lunchtime, and then we came back down and we ran the stops. It started to look like a market maker reversal as we saw the stops get run and we pop up and we take the high, right? We drop back down to an optimal trade entry. Theoretically, you want to see that as a, kind of micro inverted head and shoulders, and you would have wanted to see that run up, but we started to run out of time in the day, right? And we kind of got slapped back down here at the very end of the day. Now, what I think is happening, again, kind of speculation, but what I think is happening is that this was a, kind of orchestrated sell-off, kind of get people panicking, maybe a little bit of profit taking after the, London or the pre-market open. Also some profit taking from last week, right? We get slapped back down. Smart money, again, wanting to accumulate positions to go long. I do think the end goal is that we're going to see over 200. But if smart money wants to continue to get their orders filled at the best price possible, they're going to keep slapping price down. But we haven't taken the low right here, right? We haven't taken a lower low. We haven't come back down and take this low. So there are a lot of liquidity targets to the downside if we choose to attack those. But you can also see there's a giant fair value gap, and we found support in there as we traded down into that price range today. And that could hold us enough to see price rally up on CPI tomorrow, and then potentially even into the week, try to pop into the 200s, right? Or even the low 190s. We also know that max pain is at 195 right now, and that can change as the new orders come in throughout the week. But max pain currently sits at 195. And so again, I do anticipate that we're going to cycle back up, try to hit that 196.50 or even the 200, and then possibly settle somewhere around 195, closer to max pain. So we'll just have to wait and see what happens during the rest of the week. But hopefully this has been informative to you guys. Again, I appreciate all the support. Don't forget to like, subscribe, share with all your friends, and I'll see you guys on the next one. Good luck with your trading tomorrow.